$8 trillion burned, $9 trillion to go. Hey guys, what's going on? Jebb here, and in today's video, we are going to be talking about how the Federal Reserve's shrinking of the balance sheet is likely to cause $17 trillion worth of stock market valuation to disappear, and about half of that's already gone, and the next half could be coming in just the next 2 years. And in this episode, we're going to be talking about exactly how that will impact Bitcoin. I'm going to show you the exact correlation between the balance sheet and its impacts on the stock market. Then we're going to look at how the stock market has been impacting Bitcoin and has caused every single major bear market that Bitcoin has experienced in its entire history, including the one that we're in right now. By the time you walk away from this video, you're going to have a much better understanding of how the Federal Reserve's balance sheet works, how it impacts the stock market, and how the stock market is the number one driver of Bitcoin after the balance sheet, because it is the thing that is impacted by the balance sheet. I do believe that Bitcoin is going into a bull market, but this is definitely going to be a much more difficult one than we have witnessed in the last 10 years for Bitcoin. This decade is going to be a lot harder, and if you want to be able to navigate it, then you're going to need to know exactly what is happening in these markets today, tomorrow, this week, this year, and this decade. So without much further ado, guys, let's go ahead and dive right on into it. On January 26, 2022, the Federal Reserve released this small note: Principles for Reducing the Size of the Federal Reserve's Balance Sheet. Now, if you'll recall from this video that we just uploaded last Saturday, the Federal Reserve's balance sheet at that time was sitting at nearly $9 trillion, and everyone knew that that could not go on forever. So with this one small, seemingly insignificant press release, the Federal Reserve signaled an end to the quantitative easing that had brought about the 2021 bull market, both in stocks, in cryptocurrency, and in the housing market. Through statements such as, the FOMC agreed that it is appropriate at this time to provide information regarding its planned approach for significantly reducing the size of the Federal Reserve balance sheet, the Federal Reserve announced to the world on that fateful day that that quantitative easing not only was coming to an end, but it was about to reverse into quantitative tightening. Now, to get the full understanding of what quantitative easing and quantitative tightening is, what the balance sheet is, and everything relating to that and how that is the number one driver of the Bitcoin market right now, hit that video up there and you'll find more information. But for now, to keep this simple, when the Federal Reserve started shrinking the balance sheet, that had a market impact on the stock market, and to this point, that has led to $8 trillion vanishing. That press release came out on this very day as charted on the SPY. Now, zooming out, you can probably see that this was the beginning of something major, but you might not realize how large of a crash this truly is. You see, the United States stock market is valued in the trillions, and right before the pandemic began, December 31st, 2019, the United States stock market, at least the Fortune 500s, were worth $28,125 billion in change. Keep in mind, the Federal Reserve's balance sheet still had $4 trillion on it at that point, so it was not at zero. That was before the pandemic. That was just days before the world realized we're about to go into mass lockdowns and hundreds of millions of people are going to become infected, and that will cause a huge change to the macroeconomic environment. When the Fed embarked on their massive quantitative easing program and added $5 trillion to its balance sheet, devalued the US dollar, and still watched the United States gross domestic product drop by 33% in Q1 of 2020 alone, that led to $14 trillion of appreciation in the United States stock market within 24 months. You can see that here. December 31st, 2019, the United States Fortune 500 is worth $28.1 trillion. Exactly 24 months later, at the end of 2021, right before that QE was beginning to roll off in January, the United States stock market was worth $42 trillion. And as you can see here, that was basically an all-time high. And then this article dropped, and everything changed. From this date forward, January 26th and on, everyone knew what had long been speculated. The balance sheet would no longer be appreciating. Instead, it would begin to shrink. And the effects have been obvious. In the beginning, $47.5 billion worth of assets would roll off of their portfolios. At this point in time, beginning in September, the Federal Reserve has doubled that, and they are now not only rolling off assets, they are actually actively selling them, and $95 billion of treasuries and mortgage-backed securities are being sold or rolled off every single month, $35 billion in MBS, $60 billion in treasuries. At this pace, the Fed's balance sheet would reach its pre-pandemic size by June 2026 and be completely rolled off, with within the next 5 years. The pandemic effectively began here. The 31st of December, 2019. January 1st, everyone was talking about the new flu in China. By the 31st of January, there were fatalities recorded and people were wondering which nation it would spread to next. By the 28th of February, the pandemic was in multiple nations, including Taiwan, Thailand, Italy, Germany, and even into the United States. By March 31st, the lockdowns had begun, and so too had the printing. This could never go on forever. It never could. The Federal Reserve would have eventually had to reduce the balance sheet size, and at this point, if they continue this rate, it seems that they want to completely eradicate the entire balance sheet. But keep in mind, those pre-pandemic highs are still 15% lower than where we are, which represents roughly another $9 trillion worth of stock market value evaporating. And that's only if the Fed stops shrinking the balance sheet when they approach the pre-pandemic highs of $4 trillion. Now, it is very possible that the Federal Reserve could stop the shrinking of the balance sheet much sooner because of the impacts that this is having to the stock market and the impacts that this is having to the housing market. For example, when the Fed rolls off or sells $35 billion of mortgage-backed securities every single month, then that sucks liquidity out of the United States stock market, forcing interest rates to go higher so that the people that are providing the loans for those homes can actually make money, which means that the average American has a much harder time buying a home. Because when a couple at one point could buy a $400,000 home at 3.5% interest and pay $1,800 a month, now they can only buy a $250,000 home at 7.5% interest with the same payment. With that much money rolling out of mortgage-backed securities, leading the interest rate to move even higher on top of the effective federal funds rate already moving up by the same Fed, increasing the effective federal funds rate every month and a half by 0.25%, the housing market is going through a massive constriction. We are seeing one of the largest shrinkages of the housing market, especially values of homes, since 2008. Why? Well, very simply, everything has to correct back to the mean before that money was injected into the balance sheet. And Bitcoin was a good example. You see, Bitcoin has already dropped back to its pre-pandemic lows. It's already dropped back to $15,500. It's already wiped out all of the gains that the pandemic ever gave it, and from there it can build on solid foundation. The stock market is not in the same position. For the stock market to fall that far would be another 15% drop on the SPY, which again has already meant $8 trillion of loss and would likely lead to another 9, if not more, if the Fed continues to drop the balance sheet even further past pre-pandemic highs, which is a goal of theirs. So, theory aside, how does this practically and how has this practically impacted the stock market and Bitcoin? This chart here should give you some insight. This is the United States Central Bank balance sheet. That is USCBBS, for any of you that want to look that up on TradingView, charted over the SPY, the SPY, that is the SPDR S&P 500 ETF Trust. In between the blue lines, I have outlined points in time where the balance sheet has been expanded aggressively. One time just after 2008, between December of 2012 and September of 2014, and again here for the pandemic. And in red, I've outlined the 2 times that quantitative tightening has taken place. We saw that take place from January of 2018 right up through October of 2019 before the pandemic began. And we also, of course, can see the quantitative tightening that's taking place right now. I've highlighted with these colored boxes the impacts that this has had on the price of the stock market. You can see during this first round of quantitative easing, we saw a major jump on the stock market following just a couple more months of the stock market feeling sorry for itself and continuing to correct and find its absolute lows during 2008. But in general, the majority of this time, the stock market was going through a major recovery. During this bout of quantitative easing, where we saw nearly $2 trillion added to the balance sheet in 2013 and 2014, the stock market would go on to appreciate by 40% in just 2 years. And then during this period of expansion, where we saw this huge amount of money put onto the balance sheet, we saw the United States stock market grow by 90% within 2 years as the balance sheet doubled. Highlighted here in red, you can see where the balance sheet was shrunk and the impact that that had on the stock market. Here in between December of 2017 and September of 2019, as the balance sheet shrunk from $4.4 trillion down to $3.7 trillion, we saw a huge amount of volatility in the stock market, and we saw very little progress made towards new highs, only 5% added to the all-time high in nearly 2 years. And of course, a similar thing has taken place right now ever since the beginning of this downturn in the balance sheet, where we've lost 16% to date. And we will probably go on to lose 30%, if not more, as we wipe out pandemic-driven gains. From there, it's not too hard to tell the correlation between the stock market and Bitcoin. This is the SPY overlaid over the Bitcoin market. We're using line charts because they're a little bit easier to see on these very long time frames. Here I've outlined 4 different areas where we've seen the most tumult coming from the stock market. And by the way, every single one of these had to do with something on the balance sheet, except for this one. This one was driven by the pandemic. This first period represents a major period of sideways action on the stock market that correlated with the very bottom of the Bitcoin bear market, which started as the balance sheet was no longer being increased, but instead had then plateaued and was staying the same. That led to a plateau on the stock market and also led to much bearishness on Bitcoin. There was much correlation between the stock market, which was driven by the balance sheet, and this bear market. The exact same thing happened here. Almost as soon as the balance sheet started to shrink, that had a huge impact on the stock market, and we saw this sideways action that we saw on our previous chart right here. That correlated and, along with the halving cycles, in my opinion, defined and caused the 2018 bear market. Similarly, we saw a major crash in the stock market, this time not so much driven from activity on the balance sheet, but instead driven by lockdowns, which was another form of government intervention in the market. And we saw a 50% drop in one day on the Bitcoin market. And then we get to today. Ever since the bull market ended, November 10th of 2021, we have seen a huge collapse in the stock market. And as I said, we've already lost $8 trillion in market capitalization. And in doing so, Bitcoin has lost 75% of its value. And the stock market very well could lose another $7 to $9 trillion by erasing many of its major gains that it made from all of that liquidity that was pumped into the market from the Federal Reserve, increasing the size of the balance sheet. But now they're rolling off. What impact will this have on Bitcoin? Well, almost certainly, this is going to lead to a major difficulty as Bitcoin attempts to go into a bull market this year and next year. It's probably going to make things a lot harder for the bulls. I do believe that Bitcoin will begin starting the bull market this year and will probably still be in full swing bull market territory next year as a result of the halving cycles, which we will talk about in a future video. However, not only because of the stock market, but also because of the housing market, the balance sheet, the war in Ukraine, the potentiality of Xi Jinping's China launching a war on Taiwan, dragging the United States military into the largest conflict in the South Pacific that we have seen in 75 years. I don't think that's going to happen, but it is a possibility. There are a plethora of different black swan events and forecasted guarantees, such as the demographical collapse and offlining of Russia and China both this decade, that will lead to this being the hardest decade for Bitcoin to grow that it has ever witnessed. I am a firm bull for Bitcoin, and I love Bitcoin. I analyze it every single day, and I love you guys, and I want you to succeed, and that is why I am here to tell you this decade's going to be harder. And the next couple of years are going to be harder. This is not the golden age that we saw in 2017, 2018, 2019 of cheap money, 0% interest rates, easy ability to go out and get loans and build your crypto company and build your crypto portfolio. This is not the same era. This is a brave new world as globalization is collapsing and the stock market is correcting from the attempted salvation of the stock market by the Fed in the beginning of the 2020s in response to the pandemic. As I believe has been made clear in these 2 Climate of Crypto videos, the balance sheet and the SPY, i.e. the United States stock market, are 2 of the biggest drivers of Bitcoin. Not news, not anything that you see a lot of in crypto, but instead macroeconomics and geopolitics. And as we talked about in our video on the balance sheet, the worst is not over. $8 trillion has been lost so far in the stock market, and I would estimate about another $9 trillion is probably to go. $17 trillion from $42 trillion in market capitalization down to probably about $25 trillion. $17 trillion of market capitalization in the stock market is likely to vanish. And when that happens, what impact will that have on the average investor? And what impact will that have on Bitcoin? Well, I think it's going to have a very bearish one, of course, but that's something that we will continue to analyze and look forward to understanding here on the Crypto Jebb YouTube channel. If you enjoyed today's video, I would like to ask you to hit that like button, subscribe to the channel, and consider checking out the course where I teach you guys everything that you need to know about technical analysis, Club DeFi. Very simply, Club DeFi's Principles of Technical Analysis is the very best place in the entire cryptocurrency industry to learn about technical analysis so that you can analyze markets the same way that we do on these videos. With over 60 videos teaching you everything from the basics of technical analysis and how to read patterns, all the way through the more advanced concepts of how to put it all together in theories such as the one I am am bringing you today about the balance sheet and the stock market impacting Bitcoin. We cover it all so that you guys can get yourself engrossed in the world of Bitcoin technical analysis and start profiting in these cryptocurrency markets. Go to cryptojebb.com today and check out Club DeFi's Principles of Technical Analysis. All right, guys, that's all I got for you today. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.